All right, so I wanted to take a little bit of time and go through and just talk about some commonly used financial jargon in a multifamily real estate syndication. So, maybe you've seen emails that have been sent out and, they're talking about things like cash on cash return or IRR, or hopefully this video provides you a little bit more information on those. And certainly if you have other questions, feel free to reach out. Happy to talk to you and have that conversation. So the first one on here is cash on cash return. And basically with cash on cash return, you would take the annual cash flow that you're going to receive as an investor from the deal, and you divide it by the total amount of money that you've invested in the deal. So just for really simple math, let's say you invested $100,000 into a deal and you were going to make $8,000 a year in cash flow returns, so maybe $2,000 a quarter for a total of $8,000. Well, 8,000 divided by 100,000 would be 8%. And so that means your cash on cash return would be 8%. The second term on here is average annual return. It's also abbreviated as AAR. An average annual return essentially is the total return that you're going to receive or that you can expect to receive on an annual basis from the investment. And so typically this factors in both cash flow returns or cash on cash returns like we talked about before, and it also factors in the equity growth from the deal. Again, if you're going in and you're buying a property and you're increasing the net operating income by $100,000 and you're in a 5 cap market, that $100,000 increase can be a 20x multiplier on the amount of equity that you're building in the deal. Your average annual return is you would take your total return for the deal and divide it by the holding period, and then you could calculate your average annual return there. IRR is very similar to average annual return. We're in that it takes into account both the cash flow as well as the equity growth in the deal and also the mortgage paid out, but it also factors in the time value of money. And so if you have questions about what IRR specifically is, there is a formula, a mathematical formula that you can go and you can look up, but essentially it's your average annual return taking into account the time value of money and how long the deal is going to last, okay? And then the last term that I'll talk about here is something called bonus depreciation. And so back in 2017, based on the new Trump tax laws, basically said that as real estate investors, when you buy a building that is new to you, so it doesn't have to be a new building, it just is a new building to you, you can actually take what we call accelerated bonus depreciation on the asset. Okay, and so oftentimes what you're going to hear about real estate syndicators do is they're going to hire an engineering company to conduct what we call a cost segregation study. Okay, and the cost segregation study, the engineers are going to come out and they're going to look at the building and they're going to break the building down into all the different components of the building, okay? And then they're going to look and say, okay, well, the roof depreciates on an X number of year schedule. Maybe the appliances depreciate on a 5-year schedule. Maybe the flooring depreciates on a 15-year schedule. And I'm just throwing these numbers out there. I'm not saying that these are actually the depreciation schedules for these components of the building. I'm just trying to give some examples. Then what they're going to do is they can actually accelerate the depreciation for some of those assets. So normally real estate depreciates on a 27.5-year time span. When you do accelerated bonus depreciation, you can actually accelerate that depreciation. Maybe you're able to take 60% of that depreciation in the first year. And so that provides a really, really large paper loss in the first year. And you can use that in different ways. Talk to your CPA about how that can be beneficial for you. So I hope this video was helpful, and I hope that some of the information and content in here helps you better understand real estate syndications. If you have any questions, I'd be more than happy to talk to you. Feel free to reach out to me. My email and phone number are on here. This is Aaron Nelson, founder and principal of White Coat Holdings. We're a multifamily real estate investment company, and we invest in large apartment complexes all throughout the U.S. Thanks so much for your time, and I hope to talk to you soon. Thanks so much for watching. For more great content, please go to www.whitecoatholdings.com/learn. Thanks so much, and I'll see you next time.